Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Dadia. As always, a historic day that we saw in yesterday's session, with Nifty actually hitting the 20,000 mark in intraday trade. Overall, if you go to see, it's the seventh consecutive session of gains that we've seen, and the kind of celebrations that the markets were looking forward to was spectacular. 52 sessions actually is what it has taken for Nifty to actually take that 1,000-point rally from 19,000 to 20,000 levels. It was interesting to see how broader markets clearly outperformed the benchmark indices in trade. And this is in spite of conversations and murmurs that you hear that are the broader markets in an overbought zone or not. Little over 1% was the kind of gains that we saw in terms of the mid-cap as well as the small-cap index. Let's quickly take a look at few of the stocks which saw some good volumes yesterday. Adani Ports, Vodafone Idea, Canara Bank, HDFC AMC, as well as Glenmark. The kind of volume built up and the gains that we saw on these counters was also pretty strong. So interesting times ahead. Now, the key question is, will the momentum continue? And if yes, what is it actually going to take for this momentum to continue as well? In fact, before we go ahead, let's quickly hear out Ashish Chauhan from NSE to hear his comments on how historic this 20,000 level was and what does it actually mean for the markets and for the bourses as well.
You in this rally from 19,000 to 20,000?
In a way, last year has seen a huge amount of differences in the way the world works. China has started slowing down. The US, Europe, all of them have increased the interest rates. And that's basically has slowed down or have potential to slow down those economies, whereas India continues to march forward. And today, just next day of G20 summit getting over, the index reaching 20,000 tells you that the world is now happy about India, wanting to invest in India, and of course the Indian investors who are also investing in India in a big way. Earlier, they used to invest in real estates, in gold, in fixed deposits. Today, some portion of their income or their savings is also now coming to the stock markets. And many youngsters who have come to the job market first time are pretty much earning more than their parents are earning even today. And many of them might be into consumption, but they also save, and they have complete understanding of how the stock markets function on the mobile. Mobile has reached out, and that's why the Indian public digital infrastructure has helped us reach this level. But more importantly, Nifty reaching 20,000 is a reflection of the India's progress over last 27 years since it was launched in 1996 with a base of November 395 as 1,000. So in a way, it has given 20 times returns. But if you add dividends and rights and bonuses, probably it would be 22, 25,000. And no other country in the world has given those kind of returns, even in dollar terms, right? So in a way, India has progressed well, but I would say just the beginning. Next 30, 40, 50 years, we have a great opportunity to become rich before we become old. And that's where I think it's a good beginning. The systems are in place. Nifty is just a reflection of how India is progressing. And
the positivity that we've been listening to in terms of how India's journey is expected to be from here on, the kind of confidence that everyone's alluding as well in terms of, and plus the G20 meet has actually instilled that as well amongst investors as well as fund managers. And the long-term growth story is what everyone is betting big on. But let's quickly take a look at what the technical levels as well as the F&O data is indicating, because that's exactly what Agam was pointing out to us as well yesterday in terms of the open interest addition that was happening at levels of 20,000. Agam standing by to give us more. Agam, overall, this is something which we already discussed yesterday morning. And the only question was, will it be today or will it be tomorrow? Right? We've seen that happen already. But from here on, what are, levels indicating? Is this something which is going to be sustainable?
Sure. So, Hira, we know that we're in uncharted territory because we closed at a life high. We made a new life high, but we also closed at a life high. And as you mentioned earlier, that we've moved up in the 7 straight sessions. Needless to say, we're currently above all the crucial daily moving averages. We've also made a lifetime high after a span of 52 sessions. That was the last time we saw the Nifty hang around these levels. Slightly below this mark was back in July 20th. So where do we go from here? The real question is, as I was mentioning, we are in uncharted territory. Yes. And the question now is that while we have seen the lower end of the Nifty range advance, the upper end still remains at around the 20,000 mark, but that is also naturally likely to change should we see the Nifty see more strength. I'm going to start off with the Nifty futures. We saw an increase of around 2.2%, increase in open interest. It's still looking at a good premium. And remember that last week we saw a lot of short covering as we saw the Nifty advance, and now we have seen that convert into fresh longs coming through. The Bank Nifty September futures did see around 3.7% a decline in open interest, so a little bit of shorts being covered there as well. Bank Nifty, of course, is moved in tandem with the Nifty yesterday, and we are likely to see some amount of strength building up along with its other index peers. That said, what range are we looking at now? At least on the lower end, we did see a substantial amount of writing around the 19,900 put as far as the Nifty is concerned. There was a little bit of shift. Mind you, this is the 14th September expiry. So this is the weekly expiry that I'm talking about. And on the upper hand, we also saw the 20,000 mark call. And a lot of activity now shift to the 20,100 call. So now that's where we saw about nearly 34 lakh shares added there as well. So naturally, the range has moved upwards. In terms of some of the key levels, and we're keeping an eye on now is the 20,000 mark. Should we be able to sustain above the 20,000 mark? Well, that's going to be a big positive, and perhaps at least in the near term, there could be more strength up ahead. Finally, coming down to stocks, where we're watching out for the Adani Group companies. Adani Ports and Adani Enterprises specifically stand out because we continue to see fresh longs building in there. Canara Bank also saw fresh longs with a 2.7% increase in open interest. And finally, Bank of Baroda. It was up around 2.7%, but short covering there with about 1% decline in open interest.
Right. I mean, these are interesting names to watch out for, Agam. Yeah. And the levels, the kind of open interest built up that we are seeing as well is giving us some indication. A lot of technical analysts are of the opinion that 2,400 is something which is not far away. And the month of September is expected. No, 20,400. 20,400. Right. So that's the next level that everyone's watching out for. So at least the month of September looks pretty positive from commentary that we've been hearing. Thank you for giving us the details. So that's the analysis that we've done in-house. But let's quickly head across to Mihir Vora, Senior Director and CIO at Max Life Insurance, to give us more. Mihir, a historical moment for the Indian markets, taking Nifty to 20,000 levels. I do understand that, yes, 20,000 is just a number, but it definitely is a big one to watch out for. Your initial thoughts as to what can be expected from here on?
Good morning, Hiral. I think we just should take a moment and congratulate ourselves and, feel lucky that we are where we are as individuals and as investors and as a country. And it is a historical milestone, but, country's history and country's, economic progress goes on. So I don't think a milestone, is something that we should stop at. And as the economy progresses and grows, I'm sure there'll be many more such milestones that will kind of, overcome in due course. So I think it's just one of those, events, not a small one. But I think the markets will continue to do well over the longer term because India is one of the few growth economies in the world.
Right. So, Mihir, if you have to look at India from a valuation perspective as compared to other markets, yes, we are expensive. But if you compare ourselves to a 5-year average price to earnings as well, we're still a little far away from being expensive because we are trading at a discount. Taking that into consideration, how much more legroom do you think we have in this calendar year in terms of an uptick? And secondly, would you still advise any bit of caution?
Certainly. So two questions. One is on valuation and other one is on caution. So caution is something that should be exercised at any level, whether it's at the market bottom or at the market peak. Because ultimately, if you're a long-term investor, you want to invest in companies where you want to, participate in the long-term growth of that company, hopefully get some compounding returns rather than trying to trade in and trade out. And for that, the prerequisite is that you should not go down the quality chain. So I think we should be cautious as far as selecting companies is concerned, just because now mid caps and small caps and some of the large caps have become expensive, doesn't mean that we go to the tier 2, tier 3, or even the very shady kind of companies for short-term returns, because this is not a pass the parcel game where you switch from large to small, small to mid just because the next one looks cheaper. So I think the caution should be on keeping and sticking to quality, whether it's in small cap, mid cap, or large cap. That is a constant all throughout. And valuations is something, yes, I would be little worried about, but not too much. As you rightly said, at the Nifty level, we are trading at valuations which are a little above long-term averages, not in the euphoric or I would say ecstatic zone. So I'm not too worried about valuations, but going down the quality curve is something that I would definitely be cautious about.
Mihir, my last question coming to you is from a broader market versus a large cap perspective, because the kind of euphoria that we've seen, the kind of mutual fund inflows that are coming into the small caps, the anticipation was that probably with the run up, August would see an outflow, but it seems August itself has seen an inflow, and on a YTD basis, the inflows into the small cap fund has been almost close to around 40,000 odd crores, whereas the large cap funds have seen an outflow in the month of August. Now, do you see that rotation happening from the broader markets to the large caps, number one? And is that something that will fuel the rally? Because it seems that now the FI rally is something which could be the next leg.
So I would be a little guarded on that front. As I said, the mid cap and small cap indices touched new highs, a week ago, a couple of weeks ago. So they actually touched new highs even before the large cap indices. And that's been because of the flows that you rightly mentioned, not only in mutual funds, but I think the retail and HNI attention is also to a great extent towards mid caps and small caps and even micro caps for that matter. So the speed of rise of these stocks in the last few months is a bit alarming. There is a bit of a froth building up in the small, micro, and maybe even the mid cap space. So that's where I would be a little cautious about. On the large cap front, I'm not that worried as far as valuations is concerned, but certainly in the micro caps and the small caps, there is some froth building up.
Right. So I think these are going to be interesting times, Mihir, from here on. Thank you so much for joining us on the show. It was a pleasure to speak to you and get your views as well. So that is Mihir Vora, clearly indicating that, yes, the growth story is absolutely intact from a longer term perspective, but that bit of caution needs to be taken into consideration as well. In fact, yesterday, we did speak to a couple of other bigger names as well. Andrew Holland, we had Vikas Khemani as well as Siddharth Bhaiya. Let's see what Siddharth Bhaiya and all of them had to say as well. Clearly, Vikas Khemani was saying that I would say that this is a small pit stop in a long journey, and the real bull run story of India is yet to unfold. He was absolutely alluding to that the FI inflow that is expected to come in, that is something where we are going to see an avalanche immediately post-election. So that's going to be a big moment that we are going to watch out for. Siddharth Bhaiya as well clearly indicated that fundamentally the India story is extremely attractive in the long term, and he's absolutely bullish on that front. In 6 months, the small cap index is up 40%, and at this time, caution is warranted for sure. So clearly, and in fact, with Andrew Holland as well, when we spoke, he clearly indicated that this uptick that we are seeing in terms of Nifty hitting the 20,000 mark and the journey from here on, that will be led by large caps as well. That rotation is something that we will continue to see. So that's the overall story that we are watching out for in terms of markets. But let's quickly shift focus to individual stocks and what's going to be in focus from here on as well. Overall, next we have is Varsha, who will be joining us to give us more details in terms of what are the stocks that will be in focus in today's session. Good morning, Varsha. Which are the stocks that you've been tracking today?
So there are a bunch of pharmaceutical companies, including hospital companies. But before that, we need to see the L&T, which has updated its buyback details. So first, let's figure out that. So now L&T has revised share buyback price higher to rupees 3,200 from rupees 3,000 after a surge in its stock price over the last 1 month. Now, company has reduced maximum number of shares from 3.33 crore to 3.12 crore. Now, this L&T had announced a share buyback worth rupees 10,000 crore on July 25 after its June quarter results. Now, since then, shares have risen nearly 13%. The buyback price represents premium of 10.5% over the closing market price on Monday. Now, this L&T moves comes after BSE also raised its buyback price from 816 to 1080. Now, so far this year, if you see, the company has offered decent returns to investors, rising 39% on an year-to-date basis. Now, let's move the stocks which one needs to watch. Now, we have a bunch of pharmaceutical companies. So the first we have Lupin, which plans to enter into a business transfer agreement with Lupin Manufacturing Solutions, which is a wholly owned subsidiary. This is to carve out 2 API manufacturing sites at Davasa and Visakhapatnam and select R&D operations, including fermentation at Lupin Research Park, Pune. Now, the Davasa site is recognized in the silver category at the Indian Green Manufacturing Challenges. Plus, the business transfer agreement is likely to be entered in October 2023, and the consideration which is expected to receive is almost 750 to 850 crore. Then we have Laurus Lab, which signed a share purchase agreement with the promoter and other shareholders at Laurus Bio Private Limited for the purchase of 37,641 equity shares through secondary purchase. Now, with this acquisition, the company's shareholding in Laurus Bio Private Limited will become almost 87% on a fully diluted basis. Also, the time period for completion is approximately 1 month to 45 days, and the cost of acquisition is around 71 crore. Then we have Gufic Biosciences, which received approval from Therapeutic Group Administration, Australia, and National Health Surveillance Agency, Brazil, for paracoxib sodium 40 mg injection. Now, this is used for short-term treatment of acute pain and post-operative pain in adult patients. Also, Gufic is now augmenting its global focus by deepening the presence in priority markets of different countries, which includes Australia and Brazil. Then, lastly, we have Krishna Institute of Medical Sciences. Now, the company's subsidiary KIMS Hospital Enterprises has made a further investment in Kondapur Healthcare by acquiring an additional stake of 13.24%. Now, post the acquisition, the subsidiary's equity stake in the target entity stands at 19.86%. Also, the cost of acquisition is 20 crore. Now, this is a greenfield project which is presently under construction. If you see the Kondapur Healthcare, how the revenue has grown. So, in FY22, the revenue was almost 2 crores, while in 23 it is almost 8.41 crore, which is a growth of almost 3.7x.
So these are interesting names from the healthcare space. Thank you, Varsha, for getting us the details. So that's a whole segment that we should be watching out for as well. But moving on, you have a Reliance Retail that is in focus in today's session, and this is on the back of KKR going and increasing stake. Sesa is standing by with us to give us more in terms of what would this mean, and with KKR increasing stake in Reliance Retail. Sesa, over to you.
Right. So yeah, definitely KKR is doubling down in its bid in Reliance Retail. Now it has increased the stake from 1.17% to 1.4%. This was against an investment of 2,070 crore. Now this deal marks KKR's second investment in the company and gives Reliance Retail a valuation of a whopping 8.36 lakh crore. This valuation is even higher than the 8.27 lakh crore valuation bestowed on Reliance Retail just 3 weeks ago when Qatar Sovereign Investment Fund, Qatar Investment Authority, picked up a 0.99% stake in the company for about 8,278 odd crore. We must remember that in 2019, Ambani had said that the Reliance Group is preparing to list the retail business in 5 years. Now, as per India's listing rules, the public shareholding, including those held by financial investors of a company, must be at least 25%. Now, at present, around 10% of Reliance Retail is owned by global investors, including the fresh stake sale to KKR. So we can expect Reliance to further dilute its stake and raise more funds as it prepares for a public listing.
Right. Thanks, Sesa, for getting us the details. And this is going to be interesting to watch out for as well after the value unlocking that's happening at Reliance Industries. But moving on, a whole host of financial names also continue to remain in focus. Himansh is joining by to get us more in terms of what's happening in the financial space as well as a few other stocks that he's tracking. Himansh, good morning. What do you have for us?
Good morning, Hiral. So, like you mentioned, financial space has been interesting. We had a couple of banks in focus as well. So, firstly, starting with ICICI Bank, the RBI approved the fresh term for Mr. Sandeep Bakshi, and he's been reappointed for a fresh term with a tenure valid for 3 years and is put into effect from October 4th. Then moving on, there's TVS Supply Chain Solutions, where the board approved the acquisition of equity shares of 3 wholly owned subsidiaries that were based in UK, US, and Singapore. Now, the subsidiaries are in the business of storage, warehousing, and logistics, and they are done for an aggregate total of 450 odd crores. Now, post this acquisition, the company will have 100% shareholding in all 3 subsidiaries. And the idea behind this acquisition is to infuse capital, which is aimed at strengthening the capital structure to facilitate growth and also reduce the indebtedness of respective overseas entities and deleverage the company to improve profitability prospects. The TVS Supply Chain Solutions, which is a recent addition to the bosses as well, posted their first quarter earnings. It noted a net loss widening by almost 64 crores, and the revenues were down as well on a year-on-year basis. Now, this was primarily due to an uptick noted in finance costs, employee benefits expenses, and also miscellaneous expenses to the tune of almost 10 crores that were related to the IPO. Now, moving on to the power pack, we have Power Grid Corporation of India, where they were declared as a successful bidder to establish interstate transmission system project for Rajasthan. They are also set to build a 20 gigawatt project on a build, own, operate, and transfer basis. And they've received a letter of intent yesterday for the same. And the company has also announced a bonus, which is set to be out today, where the estimated date of crediting of the bonus is 25th September. The shares basically go ex bonus today, and they are in the ratio of 1 share for every 3 shares held. So if you are holding 9 shares, an additional 3 shares will be provided. This is expected to infuse more liquidity into the market and also lower the market price as well. Now, Sham Metallics and Energy, the company plans to exercise the oversubscription or the green shoe option for 30.4 lakh shares or 1.19% stake. This shares are in addition to the initial offer of 1.3 crore shares of 5.11% stake. And promoters Narantak Dealcom and Subham Bildwell will be the ones selling their shares. Coming on to Torrent Power, they've issued a clarification that promoters will not be pledging any shares of the company. And then moving on to NTPC, where the subsidiary NTPC Green Energy has also signed a MOU with Nayara Energy to explore green energy opportunities for captive usage. Now, just the last couple of financial packs names, as you mentioned. IDFC First Bank, the MD CEO has sold 5 crore shares or 0.762% stake in the company. And on the other hand, you have GQG Partners acquiring the same, generating net proceeds of almost 480 crores. And these proceeds will be used for exercising stock options and payment of income tax, and also towards pre-committed social causes. And then we have L&T Finance in the end, where 2 affiliates of Bain Capital are offering 65 million shares in the company, and the floor price has been set at 129 rupees. And the transaction is estimated to generate, flows of almost 850 crores for the company.
Thanks. The financials and power pack that will be fueling the rally as well in today's session. Thank you much for getting us the details. But moving on, apart from these names, a whole host of cement stocks that will be in focus as well. And this is on the back of a second price hike that has been initiated in East India in the month of September. We have Rishi who's standing by to get us more. Rishi, we already spoke about the first price hike in the first week of September, a second one in the offing. What would it mean for the cement players, and are the markets able to absorb it?
So the East was the one that had increased the price by the most, by about 35 rupees per bag in the first week. Now again, the hike shows that it's again about at 30 to 35 rupees per bag. Now the cement companies in East India, there are there is Dalmia Bharat and Nuvoco, which have a lot of exposure. Now coming with regards to the price, some more information regarding the price hike. Now majority of the earlier hike has been absorbed despite the weaker demand in Eastern India, and this is according to a Nomura report. Now, because this is the second price hike, the dealers are expecting that although the earlier one was absorbed quite a bit, it may eventually lead to some bit of slowdown in terms of demand. But however, because East India has increased the price by about 30 to 35 rupees, pan India in other regions as well, Nomura expects that cement prices may increase in other regions as well by about 17 rupees per bag. Now, if you look at a couple of regions in East India, there's Kolkata, where the demand has been quite a drag, and particularly because of the state government, which accounts for a lot of demand, and that has been a drag. Secondly, there's also Chhattisgarh, with an exception of with dealers suggesting that most volumes were sold in the market were at old prices, and because of this, the prices haven't been absorbed quite a bit.
Right.
But
So these are
the stocks that would be in focus would be Dalmia Bharat and Nuvoco, because they have a lot of exposure to the east, and there's Ultratech, which is about 20% of the capacity in east.
Right. So these are three names that we should be watching out for. Thank you, Rishi, for getting us details on cement. But another sector that you've been tracking from the metal space will be in focus. Couple of things. The data that's coming in from China is positive. Secondly, we are looking at an anti-dumping duty in terms of imports coming from China into India as well. Both of these expected to augur well for metal counters. What's in store and what's the story telling you?
So firstly, China came out with its credit data yesterday for August, and it was quite a relief for a lot of investors in China. So the aggregate overall financing was up by 25%. The medium and long-term loans to companies was up by over 137% month on month. Now, because of this, if you look at the market cues for base metals, LME, copper, and zinc prices have been up by over 1%. Zinc prices have been up by over 2%. Now, coming to India, India has imposed an anti-dumping duty on flat steel wheels by about $613, and this is according to a government notification. Now, the stocks to watch particularly would be, with regards to the Chinese data, would be Hindalco, Vedanta, Hindustan Copper, and Hindustan Zinc for base metals. And because we may also need to look out for some steel wheels stocks as well because of the import duty.
Right, so that's going to be interesting to watch out for. In fact, in terms of Hindalco as well, their US manufacturing arm, which is Novelis, is in a long-term supply agreement to supply aluminium beverage can sheets to Ball Corp in North America. And to be noted that Ball Corp is one of the largest aluminium can producers in the world. I'm sure this is something, it's just a tidbit to know, because all your Pepsis and Coca-Colas that you have in your cans, you have Ball Corp, which is one of the biggest manufacturers. Thank you, Rishi, for getting us the details as well. So watch out for this pretty closely. But apart from this, two names that I want to highlight is Chennai Petro as well as MRPL that could be in focus today. If you see Chennai Petro, the stock is up almost 15% in the last two sessions. Three factors that we are looking at: Brent crude, which has risen above $90 per barrel, and this is for the first time since November 2022, and it is sustaining above those levels. Oil inventories are at a record high as well. At record lows, I beg your pardon. And the refining margins for these companies are rising continuously. Now, on the back of these three positives, you've already seen a good move coming in terms of Chennai Petro. It'll be interesting to see if MRPL also follows suit, because that has been slightly quiet so far. So watch out for this space pretty closely. But apart from this, for all the holiday, goers and the ones who are really excited about it, Yatra Online is coming up with an IPO. Their issue opens on the 15th of September and closes on the 20th. They've set the price range at 135 to 142 rupees per share. And the basis of this, Easy Trip Planners, Thomas Cook, these two are stocks that will continue to remain in focus in today's session on the back of this announcement. So watch out for these two names pretty closely. And very lastly, on the back of the macro data, two numbers that we are watching out for: CPI for August and IIP for July. And the key is that inflation may remain elevated at 7.1%, and this is as per the Economist polled by Bloomberg. So that's the macro data. Let's see if that helps us to continue the momentum about 20,000, or does it come in as a spoil sport from here on? So an interesting day, packed with a lot of stock-specific action, a lot of macros that could be coming in from Indian markets as well. And we will get you lots more in terms of coverage during the day as to whether the momentum from 20,000 will continue or not. That's all that we have in this session. Thanks for watching, and please stay tuned to BQ Prime.